I think HomeAway is the more useful valuation. I mean, higher than the public hotel chains is, the one that everyone gets caught up on, but I think it's in many ways the wrong way to look at it. I mean, honestly, the hotel chains have their own problems and are punished for, all sorts of reasons accordingly, not least of which is that all these competitors emerging. But I think a more interesting way of looking at the valuation is looking at it at other marketplaces that are public. Like, for example, look at eBay, for example, which is, a marketplace that doesn't sell hotel rooms, but it's, buying and selling, involved in sort of, I suppose, an agency buying and selling all kinds of other goods, and sits at around a $60–70 billion market capitalization. So I think these are better metrics and help suggest why people are willing to pay these kinds of prices, leaving aside whether you want to start talking about bubblish behavior or not. I think that's the right way to look at it. Getting trapped in the mindset of saying this is more than Hilton or more than something else is really, I think, a narrow way of looking at the valuation of an emerging market.
Would you agree with that, Tom? I mean, we've been talking a lot about high valuations recently, very, very high funding rounds, a ridiculous amount of capital, some have told us, flowing into the tech markets.
They're really tapping into this whole idea of how can we share what we have? How can we make money from stuff that we're already investing in? We've all got apartments, we've all got cars. We want to find a way to kind of let other people benefit from that and benefit ourselves from it, right? By renting them out, using our, our ability to drive, use our car when we're not otherwise using it, use our apartment when we're going to be away for the weekend. That's exactly what they're tapping into. It's a very disruptive force, which is why you're seeing two things. One, really, really high valuations. And sure, we can absolutely debate whether this is lofty or not, particularly given some of the pressure that we've seen on the NASDAQ and some of the stocks that we talk about all the time that are publicly traded. Absolutely, there's a question mark about it, and I think it's a worthwhile debate to have. Two, it's disrupting existing medium right now, whether it's the hotel chains, whether it's apartments. All of these things are right now, there's a lot of legal battles that they're facing, and you see that with like Uber. Anytime somebody comes in and wants to change the way things are traditionally bought and sold, and these things that we've taken for granted for so long, and the incumbent industries are sitting there, have no reason to innovate, they're making them do it.
Right. Airbnb facing legal troubles, not just in New York, in San Francisco, in Portland, Oregon.
Everywhere you look.
Everywhere you look. Paul, do these things bother you? Airbnb, of their appearance in court in Albany tomorrow, gave us this statement saying the government will accuse Airbnb hosts of being bad neighbors and bad citizens. They'll call us slumlords and tax cheats. They might even say we all faked the moon landing. That's okay. We know the truth. Paul, does this bother you?
No, but it's part of the maturing process, right? I mean, think about what Amazon went through. For years and years and years, it pretended that it didn't really need to collect sales tax because, hey, it's not really in your state. It's kind of, it didn't really matter that it was selling into all these states. The law is the law. Eventually, they had to catch up, bring in a more sort of mature process where they could actually collect taxes in the states in which they sell, whether or not they have physical residency there. This exact same phenomenon is happening to Uber. The exact same thing will happen to Airbnb. You get to play this coy game for a little while, and then you stop. And that doesn't invalidate their business. It's just part of maturing as a business and learning to play by the rules. Where I get upset is when you see it turning into some kind of restraints to trade, where you're actually preventing new entrants in the marketplace, as opposed to saying you have to play by the rules. And that's a very important distinction.
It sounds to me like you guys are saying the valuations, Tom, don't bother you that much.
Not terribly. I mean, I think right now you could come down a little bit, but their timing is impeccable in terms of lining up this $450 million, whatever it is, right at a very crucial time. And absolutely, with the NASDAQ, the question marks about what's going to happen to the publicly traded companies, you're not going to see it show up in the private valuations for a little while longer. There's a bit of a lag effect, and there's a lot of question marks right now in Silicon Valley about whether these are warranted. But their timing is absolutely impeccable, and they're probably, with that much, not going to have to come right back into the market anytime soon. And by that point, we're going to be through the earnings, and we're going to find out whether, hey, you know what, maybe that NASDAQ decline that we've seen isn't going to be as long and drawn out as we were concerned.